Hi everyone, my name is Jibin. I'm a staff nurse working in Cork University Hospital. I think some of you find it hard to understand your payslip, so I would like to share some information about it. If you look into your payslip, you can find some of your personal information, including your name and personal number, and next to that you can find your pay date. The pay date and the pay period can be different for different institutions that depend upon your employer. Some of you are being paid monthly, weekly, and fortnightly. If you're a staff nurse working in Cork University Hospital or HSC South, you are being paid fortnightly, that is Thursday.
If you want to work out the period of payment, you can just count 11 days back from the pay date and the previous 14 days is your pay period. That is usually from Monday to Sunday.
Two important columns in the payslips are payment values and the deduction values. Payment values consist of all payment that you receive from your employer, which includes your basic pay, premium pay, allowances, and overtime. If you do not know about your basic pay, it is very easy to calculate. You only need to know about your annual salary that is usually given in the contract letter issued by your employer. If it is monthly pay, you can divide your annual salary by 12, and if it is fortnightly pay, you can divide it by 26, and if it is weekly pay, divide it by 52, which will give you the basic salary given in the payslip.
If you are a recently joined staff in public sector or HSC awaiting contract letter, you can find your basic salary in HSC website. It depends on your years of experience. Your payment for a particular pay period includes premium payment like Sunday premium, Saturday premium, public holiday premium, and unsocial hour payment. The premium usually depends upon your employer. If you're employed in public sector, you are paid double on Sundays and public holidays. If you work night shift, you get paid extra 3 hours. If you are working in any special area, you are eligible for area allowance, which is nearly €90 fortnightly. If you work in any of these areas that shows in this slide, you are eligible for area allowance.
The second main part of the salary slip is deductions. Every employee has to pay tax, USC, and PRSA. If you are employed in public sector, you have to pay pension and ASC. There are some other deductions in the pay slip like the payment towards credit union and the payment towards union fee. Now, before we move on to the deductions, you need to know 3 terms: gross pay, taxable pay, and net pay. Gross pay is the sum of all payment, allowances, and overtime or any other kind of payments. Taxable pay is the payment to calculate tax. Pension and ASC are not taxable, so taxable pay is your gross pay minus pension and ASC. Net pay is the pay that you receive in your hand or in your bank account after all deductions. In other time, it is a take-home wage. Every employee pays tax. The amount varies depends upon your taxable income and marital status. If you are a single person, your tax cutoff point is €35,300, which means you pay 20% tax for €35,300 per year, and any amount above that will be taxed at 40% rate. So if you receive €40,000 per year, you pay 20% tax for €35,300 and 40% tax for €4,700. If you are married and your spouse is not working, your standard rate cutoff point is €44,300 per year. That means €3,691 per month, €1,703 per fortnightly, and €851 weekly. And any amount above this will be taxed at 40%. If you are married and both of you are working, if she has smaller income than you, then rate band is increased by the income of lower end up to a maximum amount of €26,300, which means you will be taxed at 20% up to €44,300 and your spouse will be taxed 20% up to €26,300. All amount above this will be taxed at 40%. And finally, the total tax is calculated by adding the amount that you paid at 20% and the amount you paid at 40% minus tax credit. Now, let us try to understand about tax credit. Tax credit can be said as relaxation on your tax. That means you can reduce the amount of your tax credit from your total tax. Every employee gets a tax credit of €1,650 as personal tax credit and €1,650 as employee tax credit. If you are married, your personal tax credit is calculated as married couple tax credit, which is €3,300. So, in a year, you are eligible for €3,300 tax credit if you are single, which is a sum of single personal and employee tax credit. If you are married, you get €4,950 tax credit, which is the sum of married tax credit and employee tax credit. You might be eligible for additional tax credits. You can find more information about this in Revenue website. USC, that is Universal Social Charge. This is a tax payable on your total income, a second tax. If you joined service on or after 1st of January 2013 and are working on a pensionable position, you are in a single public service pension scheme. The vesting period for this scheme is 24 months. If you decide to leave during your vesting period, you are eligible for refund. This scheme also has additional benefits that are payable if you die while you are a member of the scheme. This usually includes the payment of lump sum on your death and, depending on your individual situation, a possible pension to your surviving spouse and eligible children. Pay-related social insurance. This is a payment made by you and your employer. PRS is the main source of funding for social welfare payments. A wide range of benefits are available to people who have paid social insurance. Your entitlement to these benefits depends on a number of conditions as well as the social insurance contribution requirements. For example, if you are applying for maternity benefit, you may need 39 weeks of PRSA paid. I hope this video was useful. Thank you for watching.